Good morning, everyone. Uh, very sorry. There was some technical issue we were facing, unable to log into the Zoom account. Sorry for the delay. I'll start the proceedings now. My name is Rajashekar Kongari, Equity Research Analyst. Before we go ahead into this podcast, the disclaimer is registration granted by SEBI, membership of BASL, and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investments in securities market are subject to market risk. Read all the related documents carefully before investing. Here is the Nifty's daily chart taken from our website. It's very important to understand the Nifty's price volume action to gauge the market. If you look at in a slightly longer format, in a time frame that is 3 to 4 months of period, Nifty has been in a very good momentum. You can see it has clearly moved upwards, and the momentum was on the upside. During the up move, you can see in April it has reclaimed the moving averages, and from there 20 DMA was held as a very good support. It tested 20 DMA couple of times, but it found very good support at that particular level, which is a very constructive sign. So going forward, this level is going to be a crucial level for the index. And on the downside, we are expecting this level to give good support for the markets. If you look at in a slightly closer time frame for the last 1 week, you can see Nifty traded in a very narrow range. It traded in a tight range. Around 19,500 level is acting as some kind of resistance for the market. There is some profit booking is happening as well. One session that is on Wednesday, Nifty fell more than 0.2%, and volume was also on the higher side. Hence, we had considered this session as an distribution day. Distribution day helps us to track the weakness in the market. Most of you are aware of the distribution days if you are following our mailers and learning articles. When the market is in confirmed uptrend, it is very important to track the weakness in the market as well. Market will not go upwards and upwards continuously, right? There will be some time where the market will succumb to selling pressure as well. So distribution day helps us to identify that particular selling pressure in the market. Currently, there is no major selling happening in the market. Distribution day count of one is not a major sign of cautiousness. So we are still bullish on the markets. We are expecting more and more breakouts to happen in the market, and we are looking for strong breakouts also to add to model portfolio. We are doing very good on the portfolio wise. On the portfolio wise, we are doing good. We are outperforming in Nifty and other benchmark indexes like mid cap and small cap as well. On the upside, there is no major resistance. Nifty 19,500 is slightly there is some kind of resistance at that particular level, but that is not a major sign of resistance. So we are expecting the market to be bullish going forward as well. For the O'Neill's perspective, we are in a confirmed uptrend, and we continue to stay in the confirmed uptrend until distribution day count increases to 3 or 4, and by the time Nifty will also breach 21 DMA, then we'll change the market status to rally uptrend under pressure. Earnings season has started already, and we are seeing big companies such as JSW, DMart reported their numbers during the weekend. Starting with JSW Energy, revenue for the June quarter has fallen 3.25% year-on-year basis to 2,900 crores of rupees, whereas the profit declined more than 48%. This is a major steep decline on the profit front to 290 crores of rupees. On the other side, EBITDA margin, which has increased nearly 790 BPS to 41.8%, which is a positive sign. This is majorly because of lower fuel costs. DMart has come up with their numbers as well. The revenue for the quarter has increased 18% year-on-year basis to 11,000 crores of rupees. Profit on the other side was up only 2.3% year-on-year basis to 695 crores of rupees. EBITDA on the margin front, EBITDA margin fell 133 basis points to 8.94, which is a bad sign. So these stocks will definitely under radar and will be some volatile action might happen in these stocks. Bandhan Bank, Kolkata-based company, has come up with their numbers as well. For the quarter, net interest income has fallen 0.9% year-on-year basis to almost 2,500 crores of rupees. Profit fell more than 18% to 720 crores of rupees. Net interest margin, which is a key ratio to be tracked in banking space, has fallen 70 bps to 7.3. Asset quality has also weakened, so not so good numbers from the Bandhan Bank. Asset quality has weakened. Gross NPS have increased 190 bps to 6.76%. This is sequentially. Net NPS have also increased 101 basis points to 2.18%. Suzlon Energy has received an order from JSW Energy to develop a wind power project of 100.8 megawatts. This project is expected to be commissioned by March 2024. Coming to today's results, major bank, that is HDFC Bank, will be coming up with their results. Also, other major companies are Tata Elxsi, Central Bank of India, CRISIL, L&T, LTI, Mindtree, Tinplate, and other companies will be reporting their numbers during the session. So if you have any of these stocks in your portfolio, please be watchful for your positions. There might some kind of volatile action happening in these stocks. Global cues are mixed overnight. That is on the Friday's night. US market closed mixed. Dow Jones closing on the higher side, whereas S&P and Nasdaq closing in the negative territory. Asian markets are trading lower in the today's market. Kospi and Shanghai are trading in the negative territory. Whereas GIFT Nifty is indicating a positive opening for the index. This is the theme for the last week as well. On the opening front, we are opening on the higher side, but on the closing front, we are closing in the lower half of the trading session. So there is strong buying is not happening during the market hours. That is the theme is happening for the last 5 to 6 trading sessions. For the chart of the day, we picked Dawat, which has been in our watch list, also called as LT Foods. Currently, stock is trying to break out from a stage 3 cup base pattern. Base pattern looks wide, but during the base formation, volume has completely dried up, which is a positive sign. And during the right side of the base formation, volumes increased, again a positive sign. And it has held 21 DMA as a good support. And ratings wise, this stock is looking good. EPS of 96 indicating a strong earnings profile. Price strength and accumulation distribution ratings are also fair enough for addition. So if these stocks come to the ideal buy range, which is a blue zone here, we might add it to portfolio. If you have this stock in your portfolio, you can consider holding it and keep a stop loss of Thursday's low as a stop loss. Thanks for joining today's pre-bill. Again, sorry for the slight delay at the start. Have a good trading session.